Hey everybody, I want to talk to you today about something that I think is absolutely fascinating, which is the fact that DeFi, Decentralized Finance, is here to stay. And when I'm talking about DeFi and decentralized finance, I'm talking about the world of crypto, I'm talking about the world of digital assets. And if you don't know about DeFi, now is the time to start learning, because there's new and powerful ways to grow your wealth and help your own personal economic situation. And that's not just true for you, it's also true for institutions. That's why it's growing at such a rapid pace, and the institutions are going all in on this. And if you're not aware of it, a big piece of news just came out that there's a company called Ripple that tried to make an acquisition of a company called Circle. Now, Ripple has the XRP token, highly popular, one of the top 5 crypto projects out there. They tried to acquire Circle, and Circle is one of the primary stablecoin tokens out there, the USDC specifically. And, of course, stablecoins are hugely promising for the industry right now. All the things that are happening, there's legislation in Washington, D.C., all kind of things are happening around it. But this industry is at this massive growth point. And I'm going to show you some evidence of that from Forbes. And I'm going to show you this article, and we're going to talk about it. And it says why Ripple's $5 billion offer to Circle was more than a power play. And they're talking about this acquisition that I just mentioned. And if I scroll down, and I want to look at this one particular area of this article. And what they say here is that we're witnessing the early chess moves of a much larger endgame. Stablecoins aren't just crypto tools, they are fast becoming the digital plumbing for global money movement. Now hear those words. They're becoming the digital plumbing for global money movement. Whoever controls the standards, access, and integration points will help shape the future of cross-border payments, institutional DeFi, and programmable finance. And you say, I don't know what institutional DeFi is. And what does programmable finance even mean? I can kind of figure out cross-border payments. So it means sending money from one country to another. But so institutional DeFi basically means where institutions are doing decentralized finance between themselves. That means not necessarily through a bank, through smart contracts. And then programmable finance just means what I just said, through smart contracts, intelligent decision making about moving money and doing transactions and clearing and settlement and all those things. That's why the institutions are piling in. And that's why it matters to you and I as retail investors. They say in this article, if you look down below this, it's a big play, bigger than Circle and Ripple. They say this moment is bigger than just Ripple and Circle. This video is not just about Ripple and Circle. It's about how you and I can participate in this and grow our wealth. So it's bigger than just Ripple and Circle, and it reflects the maturing of the stablecoin ecosystem and the blurring lines between crypto native innovation and institutional adoption. If you read between the lines, what they're really talking about here in this article is that things are happening so rapidly and in such a big way that we are at this inflection point, in the crypto industry. So I'm going to give you an example. I'm going to talk about a few things about how you can make additional yields in this DeFi ecosystem and different way to maybe think about what to do with your money right now and why this whole DeFi thing is so important. So if you look at with your money right now. I just went on my own bank. I was looking at an account and was looking at their money market funds. And the money market funds, there's anywhere from 3% to 4%, maybe 4.1% on some of the money market funds. And so that's pretty much standard, 3-4% returns on your cash in hand on short-term, cash equivalent funds. So that's money market. That's what we're talking about, money market. And so, 3 to 4%, not bad. People say, hey, I'm making 4% of my money. That's pretty good. Well, let me give you a different way of thinking about your money. So let's say we take that same cash and we put that same cash into a stable coin. Now, if you are a retail investor, there are ways that you can go in with that cash and take that stable coin, USDC, and put it to work for you and not earn 4%, but earn between 5 and 9.9% on that money. And so if you're a corporation, it means even more. There's other ways you can go to solutions like Maple.finance that's out there, and you can earn 10% on your money if you've got 100,000 or more. And so if you're a business owner and you got cash on hand, this is, even more relevant to you. But let's say you're a retail investor, you can earn that 5 to 9.9%. And so what does that mean? What does that really mean in real world money to us? So, and I have a master's in finance, and we learned this in college. You learn the rule of 72. This rule of 72 means you calculate how fast your money will double. And by doing that, you say, I take the number 72 and I divide that 72 by the interest rate that I'm going to earn. So let's say you earn 4%. I talked about money market funds. You're earning 4% on your money. You divide 72 by 4, that gives you the number 18. That means 18 years for your money to double. Let's say that you have $10,000 in an account and you are earning 4% on your money market fund. Well, that means 18 years later, that $10,000 in your is going to go to $20,000 in 18 years. So what if you're earning the 8% on your money? I said 5 to 9.9. Let's just say easy math, it's 8. So that money goes from 18 years to 9 years. So your money doubles in half the time. And so with that math, that makes it crazy obvious that anybody that has money invested and they want to think about it growing faster, the more interest rate you earn, obviously the faster that money is going to grow and double. That's the calculation we just did. And so if I want my money to double in 9 years versus 18 years, then I'll need to earn 8% on my money versus 4% of my money. And so the way I can do that is participating in this new digital asset industry by doing things as simple as owning a stablecoin, as simple as having USDC in my account, clicking a button in Ledger Live and saying, let it ride. And so the difference is, instead of going to my money market fund in my bank and clicking it and deploying it and then it being locked up for a certain amount of time in the money market fund, I can put it in and take it out and go do whatever I want to with it. But while it's sitting in that account, I'm earning an annualized 5 to 9.9% on my money. It's just a kind of a obvious thing to be able to go do that instead of having, and I'm not anti-bank. I'm just saying if you want to have some of your money in stable coins and have it grow faster than the money you've got in money market funds, it's something all of us should be looking at and thinking about. And so this whole industry and talking about it with DeFi and decentralized finance and digital assets, this, as I mentioned at the very top of the video, this industry is here to stay. So even money market funds themselves are being tokenized, are being created into a digital token. And so why are institutions doing that? Well, I mentioned being able to take your USDC as a retail investor and investing into account and earn higher yield. Well, institutions are kind of doing the same thing at a massive money level. They're taking money market funds and they're making all their operational processes easier and faster, and they're getting more liquidity, and they can fractionalize, which means divide up that money market fund into smaller chunks. With tokens, they're getting all kind of benefits, but there's all kind of different things that with those tokens they can go do and leverage them and things that just hasn't been possible in the world that we've been living in, and paper transactions and manual transactions. And so now we have what's called the velocity of money. The money can move faster and do more transactions in a day and be leveraged and be lent or borrowed and all kind of things so much easier when it's in digital format. And that's where we are today. That's why this industry is growing so rapidly, and that's why the institutions are, for example, tokenizing money market funds to the tune of trillions of dollars right now. That's why private credit is being tokenized. It's called real world asset. What I'm describing are real world assets. That's why bonds there's digital bonds being created, because it's easier for the institutions to do these transactions through smart contracts, and being able to do the clearing and settlement, and being able to do all the operational efficiency things, all the things that need to be done. Instead of having all these manual processes, they turn it into a digital process, and it's boom, boom, boom. It's easier for them. There's different ways and things they can do with the money that they couldn't do before. And I'm not talking about nefarious things. I'm talking about just ways they can leverage the money and move the money and send the money internationally and all of it. It's all just a better system, and that's why everything is moving that direction. And so you can look at things like real estate being tokenized. You can look at things like, I mentioned bonds. I mentioned, arts being tokenized. And so all of these things are going to be coming in digital format. And so we as retail investors need to start looking at that and deciding, okay, how much of my portfolio do I need to allocate to these digital assets? How much do I need to be looking at this to grow my own personal wealth, instead of letting my money being sitting in a CD earning, a couple percent or 3% or whatever, or, a money market fund earning 4%, when I can be doubling that rate and doubling my money, twice as fast. And so there's all these benefits to it, and you know, moving money easier. If you want to send money to somebody, you know, a relative overseas, you can do that instantaneously with a stablecoin now. And so it's something that I'm, you know, all the time when I'm out speaking to people and you know, in front of groups or crowds or on podcasts and different things that I'm doing, I'm telling people about this new industry and helping make them aware so that people can start taking advantage of it. With this channel that you're watching has a whole training program that you can subscribe to called Prime DeFi to learn how to take advantage of your money. If you look at the link down below here, you can see that and start looking at it for yourself and learn how to different ways to grow your money through DeFi. It's not just stablecoins. There's all kind of different ways. And so hope you enjoyed the video, and hope you found this valuable, and we'll keep putting these out and keep watching. Thanks, bye.